Everything you need to get set for investing in the Dar es Salaam Stock Exchange this week, straight from the city of Dar es Salaam. Good morning, everyone. This is A Trader DSE Weekly Update. We appreciate your tuning in. We really do. Now let's get straight into it. Alright, and starting off with the most liquid shares, which were the easiest to buy and sell last week, they include the following, where at number 1 we have CRDB accounting for 71% of the total volume traded for the week. At number 2 we have TPCC Twiga accounting for 11% of the total volume traded for the week. Finally, at number 3 we have Tanzania Oxygen Limited accounting for 7% of the total volume traded for the week. Now last week the all share index closed at 1,901.82 on Friday, which was a 1.53D increase compared to Monday, 1,873.19. Now, this was mostly attributed by an increase in the value of shares traded in the industrial and allied sector, as well as the commercial services sector, of which we shall look into very shortly. Now, from this table, we can firstly see that NMB shares have gone down in price despite showing excellent financial performance. For the first 6 months of the year, the fall in such share prices may be an opportunity for investors who are seeking to buy these shares at more discounted prices and own as many shares as possible. Now, from the industrial and allied sector, we can see that Tanzania Oxygen Limited share prices have gone up in price, and this might be perhaps due to their excellent performance for the year ending 2021, of which from those results, the company's directors had recommended a dividend of 40 shillings per share to investors, and this may have caused investors to buy Tanzania Oxygen Limited shares in order to take the opportunity as early as possible. Now, Swissport shares have continued to go up in price as indicated from the chart. The spike in price had mostly occurred in July, and this is due to a combination of several factors, inclusive of dividend payout to investors, shareholders, and perhaps investors' confidence that the company will continue to perform well in this sector due to lower COVID-19 travel restrictions and improved tourist activities in the country as a result of continuous efforts made by the country to promote itself as a tourist hub internationally, as well as investor speculation might have led to an increase in share prices. All right, now moving on into company news. At number 1, we have Dar es Salaam Stock Exchange itself had issued its half-year financial performance for the year 2022, and here are the quick highlights. Now, right off the bat, we notice a 34.6% revenue increase, which came largely from transaction fees in the first half of 2022. Now, the half-year 2022 had transaction fees worth 1.04 billion, which is a 199% increase compared to a 346.5 million in the half year of 2021. Now, this quickly informs us that bond and equity transactions have increased largely in the last year in the DSE. Now, the net profit for the year had also increased by 31.3% as the company was able to retain their revenue by not incurring too much in expenses, which shows that management was effective in managing expenses for the first half of 2022, which also resulted into a net profit margin of 62.3% for the half year of 2022. Their assets had increased by 4.5%, which resulted into a return on assets increasing by 29.1% as well. Now, the market sentiment towards the DSE has been positive, as we can see the share price went up by more than 50% in the last year. Now, we also have CRDB, which had issued its half-year financial performance for the year 2022. Quick highlights, the banking giant experienced a 30.8% revenue increase, which came largely from an increase in interest income in the first half of 2022. Now, net profit for the year had also increased by almost 100% at 96.4%, as the company was able to retain their revenue by not incurring too much in expenses, which also shows us that management was being more effective in managing expenses in the first half of 2022. This also resulted into a net profit margin of 33.75% for the half year of 2022. Assets increased by 26.6% due to an increase in the loans and advances that the bank provides, which resulted into a return on assets increasing by 63.6% as well. Now, the market sentiment towards CRDB has been pretty positive, as we can see the share prices went up by 35.6% in the last year. Also, so far, the bank is below the benchmark set by the Bank of Tanzania for the cost-to-income ratio as well as the non-performing loan ratio. And this is good news because banks cannot pay dividends to their shareholders if they are not below the benchmarks set. Now, the other banking giant, NMB, had also released their half-year performance for 2022. Also, an increase in revenue by 21.3%, largely from an increase in interest income in the first half of 2022. The net profit also increased by 53.4% as the company was able to retain their revenue and managing their expenses very well for the first half of 2022, which resulted into a net profit margin of 26.7% for 2022. The return on assets also increased by 27.7% as well. Now, the market sentiment towards NMB has also been pretty positive. As you can see, the share prices also went up by 33.3% in the last year. The bank is also below the benchmark set by the Bank of Tanzania for cost-income ratio and non-performing loan ratio, which again is really good news because the bank would not be able to pay out dividends for the year if to the shareholders if they are not below the benchmark set. Now, finally, we have Tanzania Cigarette Company with its half-year 2022 performance as well. Revenue increase of 4.6%, which came largely from the sale of cigarettes to both local markets as well as foreign markets, as in exports. Net profit for the year increased by 31.3% as the company made efforts to retain their revenue in order to offset their expenses. Net profit margin of 19.9%. Now, the return on assets had increased by 34.8% because they were able to increase their net profit despite a slight decrease in their assets. The market sentiment towards Tanzania Cigarette Company has been pretty indifferent. As we can see, the share price stayed stagnant at 17,000 in the past year. This is most probably because of the price being really high, as TCC is the most expensive stock in the market currently.
Alright, let us move on to treasury bond trading, where the 15-year treasury bond offering the old coupon rate was the most traded, and the most expensive trade happened on Tuesday at an average price of 126.3565, and these prices led to the lower average yield trend we can see here. And on the 27th of July 2022, there was a treasury bond auction for a 20-year treasury bond offering a 12.10% coupon rate per annum, and here are its highlights. It was oversubscribed by 26.5 billion Tanzanian shillings, where being oversubscribed means that investors came forth with way more money than the government needed. This was largely because investors in the DSE prefer to invest in longer-term treasury bonds, which offer higher coupons, such as this 20-year treasury bond as well as the 25-year treasury bonds. The minimum price to go through was 100, and this was a par price, as the government decided to choose auctions which start from 100 to avoid costs in terms of paying the loan back with an additional capital gain. And over here we can see the timetable for the upcoming treasury bond auctions that are going to take place in the new government fiscal year 2022-2023. And with that said, thank you for choosing A Traders, your partner to financial freedom. Don't forget to follow us on our social media platforms to keep you updated. Also, don't forget to check our website out at www.atrader.co.tz. Have a great week ahead and karibuni sana.